All right. Should we get started? There might just be a couple more people drop in along the way that will be able to join. So, hi everyone. So I'm Simon Schwartz, and welcome everyone this evening to this webinar on how to get fair and easy access to ASX Capital Raises. So we're very lucky to have this fireside type chat tonight, as close as we can get to a fireside chat in the current environment with the founders of 180 Markets in Greg Lowe and Sean Factor. So we're going to have a bit of a chat with them, treat it as a bit of a Q&A session along the way. We do have a couple of different ways that, if you like, you can post questions, and I'll kind of look out for those and try and pick up for some of those. So if you want, if you're tech savvy, there's a little chat button in the bottom of Zoom, and so feel free to pop things into Zoom if you like. Or you can just email info@180markets.com.au, and we'll watch that as well throughout the chat, and we'll pick out some of the questions or the common themes, and we'll put that to the guys as we work through the evening. So over the next half hour, I want to talk to the guys a little bit about what they're seeing in the market, but really what drove them to create 180 Markets and how that is opening up the market in terms of the access. So I've been an advisor to 180 Markets for a little while now, and really took that on because I was quite intrigued and amazed at what the guys were putting together and how it was presenting opportunities to investors that may be experienced or maybe less experienced like myself, who haven't had the chance yet to play in some of these new investment areas that previously were really reserved for people with a lot of experience. So it was an area that I was really interested to get involved in. And so I decided to see what I could do to help the guys out. And we're going to talk a little bit more about what 180 Markets is in a bit of detail over the next half hour. But at the highest level, what 180 Markets is a place where ASX Capital Raises are being aggregated from many different brokers and being basically, as an investor, put at your fingertips. So super easy process that you don't need to have direct relationships to all these different brokers to get access to. You're riding on the back of the expertise of the guys who've set this up, who are out and out experts at this. So it's a really brilliant way to access a whole new side of the market. I just want to, before we jump into sort of the Q&A, cover off a couple of terminology things, because I think that there's people who are going to be on the webinar who've got different levels of experience in investing in these types of capital raises. So to talk through the process just at a very, very high level over sort of 30 seconds to a minute, when ASX listed companies want to raise capital, they generally end up with putting those capital raises to brokers. And as an investor, you have to have some sort of relationship with those investors, with those brokers as an investor, to be able to have access to them. And what would happen is a company's trying to raise a certain amount of money. You would have the opportunity then to, I guess, bid for how much of that capital raise that you want to be part of. And then if that is oversubscribed, you'll be cut off a small piece of that as your part of the allocation. Typically, that part of the process of allocation has been behind a curtain. So you wouldn't really know how you've been allocated that amount. You've just got to trust that it's been fair. And that's been really as well core as to what the guys have been trying to really make a transparent process in 180 Markets. From there, once you're allocated those shares and they end up in your ComSec or your brokerage account, and all that process is handled by 180 Markets. So you'll hear the guys talk a little bit about terms like placements and deals. They're terms that are interchangeable with those ASX capital raises. So they're often called placements or deals. That allocation process, if you're not allocated everything that you were hoping to get because the deal's been oversubscribed, that's called scaling back. So sometimes you'll hear that term. There's a term that Sean will talk about, cornerstoning, as well, which is something that normally you wouldn't have exposure to, but the guys are bringing as well to the front. The last thing I want to point out is these types of placements or deals are for what we call experienced or sophisticated investors. They're not subjective terms in terms of experienced or sophisticated. They're really certain qualifications which you must have, and you can have a chat to your accountant about that, or an advisor. Accountants can issue a certificate, and you can pop that in as part of your registration process, which will give you full access to these deals. So I want to introduce you to both Greg and Sean, who are co-founders, and I guess I'll turn it over to Greg first initially. And Greg's had over 20 years as a professional investor. He's been a partner of a $3 billion fund. He's been involved in all sorts of listed equities and unlisted equities, both here in Australia and also abroad. So I'll hand it over to Greg in terms of the brainchild behind 180 Markets together with Sean, and if he could sort of, I guess, introduce himself.
Thanks, Simon. Appreciate it. Maybe before we get into the specifics of 180 and placements, maybe I think it's good to just start out from a high level. What are we seeing in the general markets? And the reason that that's important is, there's a famous, I guess, trader expression says, if you don't do macro, macro will do you. And, what does that really mean? It means that sometimes if you don't get a high level, if you don't see the forest through the trees, it's often, you can miss the most important decisions on how you're going to make money. So it's important to get a high level as well as getting down low into the detail. And, specifically, what are we seeing? Well, firstly, we look at the ASX 300 index as opposed to the 200 mostly. And the reason for that is because the 300 index is focused on small capitalization stocks. And that's important because the vast majority of equity placements take place in small capitalization stocks. For every Lendlease capital raise, there are 20, if not more, smaller capital raisings. So that's where the action is. Secondly, what are we seeing overall in the Australian economy? Obviously, it's been an unbelievable situation with Corona, but it's actually a little bit better when you look at the unemployment numbers, I think, than people expect. Obviously, certain industries like travel and cafes, unemployment rates, massively down 30%. But then, interestingly, when you look at mining services and healthcare, those rates are only, mid to high single-digit unemployment rates. And that's especially important because the vast majority of capital raisings that we are seeing right now are in the mining and healthcare services space. So the third, and I guess probably the most important question that everyone's asking is, what is the recovery going to look like? And look, nobody knows exactly, but one of the things we could do is look at China and see how they're going so far. And from day one of their quarantine to day 75, goods and services for them have recovered about 50%, and their manufacturing industry has gained back to about 90% of full capacity. So those are good indications of where we could be, and call it, now that we're going to open up again in Australia in about 10 to 20 days time. So that's a little bit about what's going on from a high level. And then maybe to discuss more about 180 itself, I'd like to turn it over to my partner, Sean Factor. Before I turn it over to you, Sean, though, I just want to give a brief introduction, folks, to all of you who don't know Sean. Sean has been an ASX trader, a small cap trader his entire career. That's the only job he's ever done. I'm not going to say how old Sean is, but suffice to say he's been doing it for a long time. And frankly, you don't last doing it unless you are pretty good at it. And finally, there really is, after thousands and thousands of placements, there is no permutation of some type of transaction that Sean has not already seen. So in short, you're really in a good, safe set of hands here with a lot of experience. And with that intro, Sean, I'll just turn it over to you.
Thanks, Greg. I actually worked in a ice cream shop called Carousel, serving people ice cream all day. So
okay,
that was my first job. So yeah, I mean, it's pretty unbelievable times that we've gone through, as you all know. And I guess the whole COVID-19 market collapse has given us a lot of opportunities. So in the placement market at the moment, we're seeing a lot of discounted raises from a really cheap base of prices. We're currently seeing the bigger brokers like Bell Potters, Canaccord and Citigroup doing the a big majority of the raises, and a lot of them are being done at really discounted prices, and they heavily scaled back. So we've been involved with quite a few. For example, we had an offer on our site. It was Alexa Energy. It was at a 48% discount, and there was just a huge amount of interest. We're seeing a lot of really well-planned raises where the discounts are really hard to ignore, because it's coming from such a low base that it's really, most of these are really tempting. On the other side of the market, the really small cap side, the micro caps, we're seeing some really interesting raises where the market is showing that speculation is still really well alive, which is surprising given what we've gone through. So we had a stock in our sites about 2 weeks ago, Predictive Discovery, PDI is a code. It was trading at 0.6, the raising was at 0.5. It didn't excite anyone. We didn't have anyone take it up. We looked at it pretty closely. The stock went up 1,400% in 10 days to 7 cents, all on a little discovery. It's whether the discovery turns out to be anything major or not, we just don't know. But there's other raises. We had one on our site, IBX. It included a free option, and we had quite a lot of people take it. And the stock went on a little bit of a run, and you get these free options as well, and you're more than doubling your money. So there's still a lot of high volume and big movements in the market. So we're still feeling pretty comfortable that there's a lot of money to be made as long as you're cautious.
Yeah, thanks, Sean. Do you mind just expanding on free options, what that actually means? Because I know that comes up quite often with these types of raises.
Yeah, so I guess there's a few types of options. So there's the more old-fashioned ones that are listed and traded, and you've got to buy them, and they're more over the blue chips where you get a call and a put option. But these options are free. So, for example, with IBX, we paid 1 cent in the raising, and you got a free option to buy the stock at 3 cents. So the stock hasn't traded at 3, but there's something called time value in these options. So IBXOA has a 3-year life, and even though there's only time value, there's no intrinsic value, it's still trading at 0.5 cent. So that adds a big component to your return, especially if the underlying share price has a bit of a movement.
Thanks, guys. That was a really sort of useful insight into this kind of investment type. So, Greg, do you want to just give us a few minutes background in terms of the opportunity you saw in creating 180?
Yeah, thanks, Simon. Maybe just a small backstory first on 180. I'd always participated in Australian equity placements, and I'd known Sean for a number of years, more on an acquaintance basis, but I knew that he was very, very active in the market. So I approached him in July of last year, so almost a year ago now, about creating a boutique firm to really, to specialize in these placements and to open up to a wider audience. And I said, there were 3 major reasons why I loved the idea. Firstly, I'm an investor by heart, and I thought that equity placements is just an incredibly niche alternative investment strategy that nobody really follows, but just has an amazing risk-reward scenario. The second factor of creating it is that it's all well and good to know that there's a strategy out there, but how do you get access to it? And we wanted to make it, super simple for the average wholesale investor, as opposed to just reserving it for AFR billionaires. And third, and probably as much as anything, any business is always about the people, and you want to be with proven winners. And that's what you have with 180. So I approached Sean. I must say he was a little hesitant at first. It took a little bit of persuading. But I did get him over the line, obviously, and here we are.
Okay, I just want to pick up on that hesitation, Sean, if I could just ask you, being 41 years and 3 weeks old, what was that initial hesitation, and what turned you around in terms of the opportunity you saw here?
Yeah, thanks, Simon. So, yeah, no, I was a bit concerned at first. I guess I have gone through my whole career deploying my own capital, and this was a massive change in direction. But I guess Greg persuaded me, and the time was right, and we created a small boutique sort of brokerage firm, and we were ready to do deals. So we started a little website, and we actually noticed that we could put brokers' deals up too from what we created. So it wasn't an intentional sort of move. So we spoke to our developer, and he made a few changes, and we actually noticed that with a few little clicks of the button and a few late nights that we had a little sharing economy in the placement world, which is pretty unique. So we've got quite a few planned additions to what you see now, but there may be a spy or two in the room from our competitors, so I won't give anything away. But yeah, here we are a few months later, and we've got the best of both worlds. Our investors get access to brokers' deals, company direct deals, and soon they'll get access to deals that will be cornerstoning, and you guys can invest alongside us. So yeah, I guess when we launched in February, we had a clear goal, and that was to be the center of the ASX Capital, the capital world. And that's one that we really committed to doing. We want to get our investors access to every ASX Capital raise out there.
Sean, can you just touched on cornerstoning early on, and you just mentioned it there, so it's probably a good time just to pick up on what cornerstoning is for those who haven't been involved in that before?
Yeah, sure. So when I mention cornerstoning, that's more from our perspective of getting the deals over the line. So there's a lot of work behind the scenes getting placements to happen and getting to the company and organising the deal. And what we typically have, I mean, more myself in the past, what I've done is I'll spot opportunities in the market that I want to invest in, and these have usually got certain criteria. So what we're doing now is we'll approach the company and we'll do the hard work and guarantee them the first bit of the placement, and we'll probably invest the first quarter or a third or somewhere around that, and offer our investors to invest alongside us in these deals. So that was the whole original plan, and that's one we haven't done so much of given the whole market crash. It's hard to take big positions in this environment. There's still a lot of macro risks out there, but we're getting closer to doing a cornerstoning deal, and it'll be really exciting when it happens, because it's been a lot of planning that has gone into it.
Fantastic. So I don't want to probe Sean on some of the plans for the unique things that are going to be brought onto the platform shortly. But maybe, Greg, if you could just at a higher level talk about, where you guys actually want to take it in terms of those goals.
Yeah. As I said, it really comes down to, three major points again. Number one, we think that equity placements is just an incredible alternative risk reward strategy, for sophisticated investors. So we think that, it's an amazing strategy that's overlooked. Number two, we want to give you access to it. We want to give you simple access to it. And that involves, 3 minutes of paperwork, not opening a separate brokerage account, and then access to, literally hundreds of transactions from a myriad of different advisors. And third, we want to be with the best of breed of people. And that's what we think that we are bringing to the table in 180.
So thanks, Greg. Sean, you've obviously had like a wealth of experience in this kind of space, and probably been approached with all different other kind of capital raise channels and things like that. So, what do you see the difference being with 180 that you hadn't seen out there before?
So, yeah, there are a few competitors out there, and everyone's got their own unique sort of difference. And what we trying to do is make everything fair and give everyone access. So what we've done that's different is we sign on brokers onto our platform. So once you signed on, we expect every one of your placements and IPOs. So we had an incident 2 weeks ago where a broker had signed on and they didn't give us a deal. So we know which deals are pretty well sought after and which ones aren't, and this one was. It was many times oversubscribed and the broker didn't offer it to us. So straight away we took them off our platform, and they won't be giving us or our investors any more of their deals. We don't want the crap. We want everything. We want the good deals, and we want the deals that may not be as good or may not seem as good, but that turn out to be the gems like PDI and IBX. And as an investor, that's it's really hard to pick up at first, but when a deal's really oversubscribed, and it's in a hot sector of the market, we want our investors to get access to those. So that's the first difference. And the second difference that no one else is doing is cornerstoning deals and allowing their investors to invest alongside them. And that's within the space. So yeah, those are quite a few those are the two differences at the moment, and there will be a few more, as I mentioned before, but stay tuned.
Excellent. So I might just ask Greg one more question, and then there has been a few questions come through on email, so I'll probably pick up on those, and some of those touch on a common theme that I'm not surprised to get some of these questions coming through. So just Greg, just in terms of getting up and going on 180, so if you're like me, that was only a month or two ago, just had a CommSec account and was just basically doing some trading. How much more do I need to do? Do I have to sign up, to another brokerage account? Is it a whole lot of work? Are there costs? What's involved?
No. Again, this was a critical part of what we wanted to build. It's absolutely simple, and you can get up and running in minutes. All you need to do is to upload your identification, a copy of your driver's license, your sophisticated investor letter proof. Just give us the details of where you have your current brokerage account. To be very clear, you do not open a new brokerage account, and that's it. You're all set and you're ready to go. And then once you have that, and that should take a matter of minutes, you have access to hundreds of transactions. And as I said before, a ton of advisors that you would, and the best thing about it is you would never even know as a general investor that these advisors and brokers even exist.
Yeah, excellent. Okay, so just going to, one of the questions that came through is one I know, Sean, I asked you many times myself, so probably worth sharing some of those insights. I did participate in my first placement through 180. It was my first one ever of this investment type just a few weeks ago, and it was on IBX, which you mentioned before. And it was, very successful. As you sort of mentioned, it's sort of most people that participated sort of more than doubled their money. But what would you say, advice-wise, for people that, looking to do that first placement and, try out this kind of investing?
What I've always said to people that have asked me about trading or about anything in the financial markets is, unfortunately, you got to learn from your mistakes. So it's pretty hard to have mistakes, because usually that means you lose money. But the biggest way of learning is from mistakes. So if someone else would ask me, I would say just open up a simple Excel spreadsheet and track the offers that are on our platform and see what they do. So Simon, you mentioned before you now like free options, which we all do. So there are quite a few deals which are giving free options. So as well as getting the upside from the share, you're getting the upside from the option as well. So you've got that multiple effect. So probably 1 out of 4 or 5 stocks on that we're offering have got a free option. I would just be very cautious with a lot of these things, and they all not going to be as good as what you make out to be. And obviously we started at a pretty good time because the market was coming off the lows, and there's been some really good capital raises. I mean, we had one today that it was actually amazing. A quick fee, so it was open for 40 minutes and then they closed it. So the demand in some of these things are crazy. So the ones like that, if you can pick the right sector, are going to be probably better than the others. So yeah, I guess I would just, if you haven't done placements before, you've got to be really careful and just treat it like any other thing where you track it and you're watching and you're looking for different trends and find something that works for you.
Excellent. So, Greg, we've got a question here. There must be either a couple of brokers out there or broker sympathizers out there. What's in it for brokers, I guess?
Yeah, it's a good question, and I know that there are some brokers here. Very simple, one-word answer: distribution. I've never met a broker yet who doesn't want more clients. So with us, you have access instantly. Within 3 minutes, you can upload a transaction, and you have access to then, this whole network of sophisticated investors that are ready to bid on your transactions. That simple. Extra distribution within 3 minutes.
Excellent. Sean, questions come through which I might put to you. Just in terms of, again, the people who are just starting out and just understanding the process and want to try it out. So in terms of the minimum investment size or, is there a percentage of commission that 180 takes when you invest? Could you explain?
Yeah, so in terms of minimum investment, no, there's not at the moment, but we may put one on. At the moment, it's fine. So you can bet $1,000 or a few thousand, but we may make a minimum of 5,000 or so. There's quite a few brokers that don't really like anything less from people, but at the moment it's fine. You can go smaller. And in terms of commission, so it's we are one of the cheapest out there, and what we are saying to brokers is if you've got a deal that's really hot, we would rather take zero commission if that means our investors are going to get a high allocation. So the way a lot of brokers work is if they got something that's well bid for, why would they give it away if they got to pay commission and they can keep it themselves? No offense to the few brokers out there, but a lot of them are very short-term thinkers. They're not about relationships, they're about the current deal. Sorry to the few to the brokers, but we're about the relationship. So we're signing on brokers, and if we can make our investors money by getting them better allocations and not earning anything ourselves, we'll do that. So a few of the first brokers on the site that signed up, we're not taking any fee. So for the first few months, we're not earning anything. We want our investors to make money before we make money, and it's all about long-term relationships from us. So when a company does a raise, it's a different story. There's if a company comes direct to us, we will take a fee, usually around, between 4 and 6%. So we are lower than typical brokers out there, but for us, it's about the long-term game. It's not about fees.
Cool. So just one or two more questions, and then we'll sort of be running out of time. But so, Greg, just in terms of the timing for launching kind of 180, it's sort of you mentioned before COVID hitting, and the impact on the market and the impact in terms of what 180 was planning on doing. So, have you seen that?
Yeah, well, obviously, we certainly did not see this coming by any stretch of the imagination. But it has actually become an opportunity for us from 2 points of view. Number one, both Sean and I are not super technical, so it gave us a chance to work through all the bugs in the platform, which is really has helped us tremendously just get everything up and running smoothly. But secondly, and probably more important for you as the investor, what's created is just an incredible amount of pent-up demand for capital raisings. There are so many companies out there that either had to delay capital raisings that they already had in place, or they need to raise capital to get them through the next 6 months. And they're all, coming to the market now, and they're all, as I said, doing tons and tons of capital raises. So from that point of view, the timing really has been perfect.
Excellent. Another question. We've actually had a bit of a flurry, so if people don't mind just staying a few more minutes, that would be excellent. So Sean, maybe I'll put this one to you. There's, I think, you touched on allocation process and when things are scaled back, and I mentioned at the beginning that a lot of that's done behind sort of a black curtain traditionally. Can you just sort of talk us through that from a 180 perspective?
Yeah, so we've created a special formula in the back end that allows it to be completely fair. So I've been asked before, does 180 Markets and its associates get treated better than everyone else? And the definite answer is no. When we bid in the placement, we get exactly the same allocation as everyone else. So let's say, for example, we doing a raise and we get scaled back 50%, everyone is going to get half of what they bid for, unless one person ends up with over 85% of the stock. So if you get a really hot capital raise and it's way over demand, and we get an investor that bids double the size of the raising, we have to accept that bid, but we know that they trying to play the system. So if that investor's ended up with 85% or more of our total book, they will be scaled back a further 15%, and that 15% will go towards everyone else. So it's a pretty fair sort of process. The only time we get treated differently is when we cornerstone. So if we cornerstone a deal, we're doing it just to get the deal to happen. So we'll take the first, say, third or quarter, and the rest is available to our investors. If you like to cornerstone too, and that's something of interest, speak to us and we can allow you to cornerstone with us as well. But most of the time when we cornerstone, we want our investors to all have equal access. So yeah, that's the process that we've set up.
Okay, thanks, Sean. Okay, we've got one here around whether 180 ever aggregates into an SPV and becomes one shareholder. That's from an extremely experienced investor out there.
Yeah, maybe I'll go into that because that was part of our original plan. So
expand on the question as well, just in case anyone doesn't understand what that means, please.
So I think he is referring to a special purpose vehicle, and that's when you combine quite a few investors into one and you invest under that entity. So originally we were considering, and it still is a consideration, of allowing retail shareholders to invest through an SPV into placements. So retail investors are not allowed to invest in placements currently. You have to be a sophisticated investor or get a pass such as an experienced investor. If we were able to do the SPV, it would enable us to invest on behalf of the retail investors into placements. But we've had a nightmare with the lawyers about it, and it's something that we're not sure we want to pursue because the amount of money we're paying these lawyers is crazy. So anyone else that's dealt with lawyers would know that at the end of the day, they're the ones that are going to win out of it. And they looked into it, they've done a lot of work, and the idea is still open, but it won't be in the short term. So I hope that that's answered it. So the answer is no for now, but potentially later. If you've got a way of doing it, come and let us know.
Excellent. And we've probably got time for one more. And I reckon someone here, Sean, I think they're just using this as an opportunity to pick your brains. And I'll try and expand, I think, on the question as I understand it. So some investors are more geared around the technical side. It's sort of considered technical investors, more focused around charts and numbers and the raw hard data, whereas some other investor types are more around the fundamentals. So more, getting into the the weeds around what the company's actually doing and the industry and who's on the board and those types of things. So, what's your view on this type of investment around these, small cap capital raises? What do you tend to focus on more?
Yeah, okay, it's a good question, and one that really applies to traders versus investors. So firstly, technical is when you're looking at the charts and the short-term movements, and there's different levels of technical that you can do, and depending on the charting package you've got. But I look at, when I'm doing a capital raise, I'm normally looking at the technicals of the company rather than the fundamentals. And I've been burnt quite a lot of times looking at fundamentals of the company that it doesn't matter in the short term. So it's, to the average investor out there, it may seem that fundamentals are more important, and they are very important. Let's not deny that, but fundamentals, in my view, apply to the longer term, mid to longer term. So usually the stock will track towards the fundamentals over long term, but in the short term, in a market like ours, where often you can't make sense of things, the technicals are way more important. So look, I'm not giving you any advice. We're not allowed to give advice, but for me and a lot of guys I've spoken to are traders, don't fall in love with the stock if you're in it for the short term. The long term, yes, that's different, and the long term's a long time. And for me, and a lot of others, it's not. We're not looking for the long term. So, yeah, I prefer the technicals.
Excellent. Thanks a lot for that. So, yeah, I'll probably wrap it up there in terms of question time. We did want to try and keep close to schedule, but there's been some great questions come through. The way we were hoping to actually do this was to kind of do it in a venue where we could all be together and maybe have some drinks and network afterwards. We obviously can't do that at the moment, but what we're going to do is Sean and Greg have, kindly offered to hang around a bit longer afterwards. We'll unmute everyone, and if you want to just have a bit of an open chat and talk to the guys, you're very welcome to. For those of you who have got hungry kids in the background who have been learning from home, feel free to jump off if you do. Just want to say thanks, obviously, to Greg and Sean for sharing those insights. And thanks for everyone for, the time this evening. And, it's been great. Everyone's been really engaging with all the questions and things like that. From my perspective, I encourage everyone to just take a few minutes to even jump on board and register. As Greg said, takes a couple of minutes. There's absolutely no costs, and then you get at least access to the deals whether you choose to take them up or not. So it's a great opportunity to do so. So the guys also will be accessible by email if you want to send through any questions afterwards. I think the email address is info@180markets.com.au, or of course you can jump on the website at 180markets.com.au as well. So lots of ways to access everybody. Thanks a lot. I'll unmute everyone now and feel free to hang around a bit longer and have a chat. Thanks, everyone.
Thanks, Simon.
Excellent. Want to kick off any thoughts or discussions?
Hang on.
Sean, maybe you want to just talk to us through what you see. Actually, I might feel this to Greg. What do you see the timing around the market kind of simulate and things like that?
Sorry, can you repeat the question?
Just where you're seeing it in terms of the cycle. Everyone wants to kind of know when are things in the market going to start really sort of bubbling up again and swinging back into action.
Great question. If I knew the answer to that, I wouldn't do anything else but just put all my money on it. Very, very hard to say exactly. I mean, we've had a unbelievable destruction and just an incredible rally right back. I'd say that a lot of the older traders just don't believe the rally. But interestingly, a lot of, what you can see through a lot of websites and buying patterns, a lot of the younger people have brought the market back strongly. And it's very, very hard to say. I don't think that, but when I look at the mining companies and the healthcare companies that we see in Australia that are doing the capital raisings, I think as long as the markets are reasonably stable, I think that they're going to continue to perform.
Gordon, maybe there's one more question that came through late through email. How risky do you see these kinds of investments?
Sure. Someone's got some background noise. Yeah, these investments are risky. So any small cap stock is doing a raising is obviously like buying a risky share in the share market. It's exactly the same. So there's a lot of risk involved with these placements. It's not all making money and easy. This is a do-it-yourself platform. So we designed this for people that have got some sort of knowledge about the share market. I wouldn't be doing this if I had, I wouldn't just start this from scratch. I would want anyone to have some basic knowledge about the market, and there are a lot of risks in these small and mid-cap stocks. I mean, when you see a market crash like we just have, the small stocks fall a lot more than the bigger ones. So liquidity dries up, and it's a whole different ballgame. So, yeah, I would never expose myself to these sort of stocks, especially the small micro-cap ones.
Do you find, Greg, that the market for these kind of investments has sort of increased in the current climate, or are these ones that have sort of people have stayed away from a little bit more at the moment?
Well, I think that Australia, I believe, has the second biggest, despite our size here, the second biggest placement market in the world. The first is Canada. So, and when you look at our economies, we're both very, very similar. A lot of mining services, and also, quite a bit of healthcare as well. I think that, answering your question, as long as markets are somewhat okay, you're going to see just a continuation of capital raises, and even more so at the small end of town, because those companies, the whole reason that they are listed is to do capital raisings, is to tap capital markets. If you think about it, for a lot of them, they'd almost be better off as a private company than a public, but the whole purpose to the public markets for them is to give them the ability to tap capital.
Excellent. Thanks, Greg. Yeah, I think we'll wrap it up there. It seems like everyone, we've covered most of the questions I think that have come through. And so thanks everyone for all the input and all the discussion. And yeah, hopefully next time we can actually do it in person and have a bit of a drink together as well afterwards. So thanks everyone, and hope to see you online and out there in the market.
Thanks a lot. Thanks.
Thanks everyone.